Why would a more traditional investor be interested in cryptocurrencies? That's what I hope to answer in this video. I have historically been an investor in stocks, real estate, bonds. I've been educated in accounting and finance and have a master's and really have been taught that stocks, bonds, real estate are really good investments. And I believe that, no doubt about it. But I started to really learn about cryptocurrencies about 10 years ago and started investing in them about 6 years ago. And it's been a really interesting journey, one where I've really have grown and learned a lot of new things. More importantly, I think that I have a ability to see what truly is happening in the cryptocurrency industry. I'm not going to claim to be an expert. I'm an investor and I'm careful with my investments in crypto. I'll share with you how I've invested and what the results have been. Overall, I'm an individual investor and I'm not giving any financial advice. I'm not recommending you buy any of the coins I'm going to talk about. I'm not recommending you buy any of the companies that I'm going to talk about either. I'm just sharing my journey. I hope you find it interesting. So, cryptocurrencies were born out of the financial crisis that happened in 2009. And as a result, the Federal Reserve had to pump a lot of dollars into the economy. And what a lot of people felt was really wrong is that they bailed out a lot of institutions too big to fail. AIG was a big insurance company. If they failed, they were going to take down a lot of other companies. And that was going to really have a dramatic impact on the economy. That certainly felt really unjust, really unfair. The smaller companies and individuals really felt like, well, if an individual goes bankrupt, the federal government doesn't jump in to help them out. But these giant organizations and companies, they get bailed out, which seemed unfair. A technologist was thought, I should create a digital currency that has no government oversight, no government power to really change that currency. A government can't, issue out new dollars as an example, or new coins in the case of Bitcoin. They can't influence that currency. And Bitcoin was born in 2010. The developer developed some code that is, to this point, stood the test of time. Hackers can't hack it and take advantage of other owners of coins or the transactions of coins. He designed a distributed ledger, and this ledger exists on thousands of computers. In order for a hacker to manipulate the ledger, the hacker would have to simultaneously hack all those computers that have that ledger present in their computers and are validating that particular blockchain. The blockchain goes on the ledger. Fascinating that the technology was created. My hat's off to the developer of Bitcoin. It was a really awesome creation. So technically, I was really impressed. I think most people are impressed that, hey, he pulled it off. The person decided to stay anonymous. And that's also been interesting. Bitcoin's really seen a really dramatic rise. Early years, Bitcoins were really irrelevant. They were worth a few pennies. And now they're worth $70,000 a coin. So they have really rised up in value. Bitcoin has a market cap over $1 trillion. Amazing. So they've been around in less time. Bitcoin has been around less time than Microsoft, and it's worth over $1 trillion. Bitcoin performance for the last year, it's up 162%. Awesome performance. Ethereum is a newer coin, and Ethereum is kind of a second generation cryptocurrency. In its platform, it's designed to be able to better be integrated into applications. And Ethereum's done really well. It's up 100% in 1 year. So overall, the cryptocurrency market is a $2.6 trillion market. And think about in 2010, it was a $0 market. Now it's 2.6 trillion. A lot of the growth has happened recently with the introduction of ETFs for Bitcoin and now for Ethereum, the two most popular coins. And there was a lot of tension between the federal entities or federal regulators on ETFs. But what proved out is investors can make their own decisions on what they want to invest in. I don't think that anybody wants the federal government to tell us, what we should invest in and what we shouldn't. If we have the right information and can acknowledge that we're always taking a risk, no matter if we're buying the safest stock, the safest bond, we're always taking a risk. And with regards to cryptocurrencies, it should be left to the investor to decide if they want to buy a Bitcoin ETF or an Ethereum ETF. So I think free markets won the regulatory battle in that case. Now, there's been good news and bad news on cryptocurrencies. I would say the bad news that I was hearing 10 years ago was that people just completely didn't know the space. So they were almost treating it like it was evil because I don't understand it and I don't know it. Understandable. That's how people tend to protect themselves from being caught off guard and maybe surprised by something that's new. That's really faded. And really, what's left is the naysayers tend to be people that have a vested interest in the status quo. They don't want cryptocurrencies to succeed because that could potentially replace their particular company, their paradigm, what they've been telling their constituents. So one person I'll put out there is the CEO of JP Morgan, and he is a very influential person. He's a very intelligent person, but he really will badmouth cryptocurrencies. And I would say that JP Morgan does not have a very strong position in the cryptocurrency industry. So he'll badmouth cryptos. And I think it's because his firm has really no vested interest in the space. So he talks bad about it. But I would say at the same time that JP Morgan has nothing going on in crypto, Coinbase is the only privately held, excuse me, Coinbase is the only publicly traded exchange of purely cryptocurrencies. Its stock price is up 362% in 1 year. That's phenomenal. Robinhood, which trades a lot of cryptocurrencies along with stocks, it's up 136%. The Futu Holdings, which is represents Mumu, it's up 85%, and they do cryptocurrencies. So the brokerages that are actively selling cryptocurrencies and ETFs to its account holders are flourishing. So it's really interesting to see, and I'll be curious to see how soon JP Morgan will get into the cryptocurrency industry. And I bet you if they do dabble and jump into the market, their messaging will change because they will have a different perspective as opposed to fighting it off because their competitors are thriving at it and they just want to badmouth it. We'll see. The good news about cryptocurrencies. So first is the ETFs are going great. I think people are comfortable in buying those ETFs. I have an old school brokerage and they provide ETFs. They also allow me to buy Bitcoin and Ethereum at no fee, which is better than what I used to get out of Coinbase. So I think I'm going to ride that horse until it doesn't make sense anymore of buying my Bitcoin and Ethereum coins through my traditional brokerage because they make it really attractive. So that's been really positive news. There's also been what's been positive is FTX was a big disaster. It happened a couple of years ago, and their CEO is going away to jail for a long time. Well, that's kind of going through the system. And I just want to point out investors are getting their money out of their coins that they had with FTX. So the losses haven't been as big as one would think. It wasn't like everybody lost all their money. No, I think there was just a delay in getting your money back from FTX. And Binance is an international company. I believe their headquarters somewhere in Asia. They have their CEO going to jail for a short period of time for committing some fraud. And I think that's going to get handled. He's going to go to jail for a short period. I think he's already in jail right now. Obviously, that's bad press, but you can't say that all stocks are perfect, right? We have Enron, which happened, I guess, about 20 years ago, and all of their officers ended up in jail. It was a huge fraud, and I could show you 25 frauds that happened with stocks. You know, when you have greed in markets, you're going to have some bad actors. There's certainly been some greed with cryptocurrencies, but there's also been some really positive things. I think Ethereum, as an example, is a really positive organization, and their coin really has a bright future. So I'm glad I'm an investor. There's also another thing of good news is that there's a new term that I learned, which was central bank digital currencies. And what these currencies referred to as CBDCs are, it's a currency that's going to help industries have a digital currency specific to the commodity they produce. And the perfect example is oil producing countries want to create a CBDC for oil. The current paradigm is you sell a barrel of oil, and that barrel of oil is pegged to the US dollar. I believe a barrel of oil, crude oil, is selling at around $76 today. And that's been the paradigm for a while. And what they are thinking of doing is digitizing it, creating a CBDC specific to a barrel of oil. It's not pegged to a fiat currency like the US dollar. It actually represents in a digital form what a barrel of oil is. That's really exciting to me. When I first started studying cryptocurrencies, I thought those use cases would make a lot of sense. They're becoming reality. That's going to take away some of the power that the US dollar is going to have over the oil industry. Because whether you produce that barrel of oil in Saudi Arabia, in, let's say, the United States, down in Venezuela, it's a barrel of oil and it'll have a digital value represented by a CBDC. Really exciting to me. And I think more of that type of innovation is going to continue. Other industries, maybe steel, maybe copper, and other forms will be created, and it'll take this digital format. My investment in cryptocurrencies started really slow, and now it represents 7% of my overall portfolio. When I first started buying Bitcoin, it was trading at like $1,500 a coin, and now it's up to 70,000. And I was buying like $100 at a time. I just didn't know the space, and I wasn't jumping in head first. I was investing more time in trying to understand, trying to see where the use cases were. And I think that investment in time made me more comfortable, and I started investing more. I've been through a couple of peaks and a couple of valleys, referred to as crypto winters. And the winters allowed me to buy more coins and buy them at a discount. And I was able to maybe invest 2 to 3% of my overall portfolio, which is represented by stocks and bonds and cash. And that investment has grown to be 7% of my portfolio. It's not necessarily because I put 7% in, it's because the compounding and the appreciation of my cryptocurrencies have really grown. I'm not selling any coins. I don't plan to sell any of my coins. I think it's a good investment. It's a good hedge against my stocks and my bonds and cash. I like seeing innovation like the CBDCs because the more mainstream cryptocurrencies get, the more mainstream it becomes. I think the bigger it's going to get. It's already $2.6 trillion valuation of all the coins for crypto. And maybe that becomes 100 trillion at some point if you put a lot of these big industries into the ecosystem. So I wanted to share my experience with cryptocurrencies. Again, my point of view, I'm more of a traditional investor, investing in stocks, bonds, real estate. I've done wealth real estate. So these are very traditional investments, but I'm also a fan of technology. I've been studying technology. I've been working in technology, and cryptocurrencies just make a lot of sense. I would encourage you as an investor just to get familiar with it, study it, get to know it. What are the use cases? And not necessarily just read all the press headlines. I think the press really works with emotion, and it'd be, I think, wiser to focus on the facts and focus on, what is this space? What are they trying to do? And in making this video, I continue to share my experience with cryptocurrencies, and I appreciate everybody's comments. And I know a lot of people comment and they don't like cryptocurrencies. They kind of fear them. And I appreciate that. I respect it. Some of what I call friends online, they're not comfortable with cryptocurrencies. And I get that. I'm not telling anybody that you should be comfortable with crypto and that you should buy anything that I'm talking about. But really, I think it's productive when people on YouTube really do share their experience and what they're doing and what the result has been, what they've learned, what they've achieved. That's what I'm trying to do in this video. I hope you found it interesting, and I would love to hear your comments on cryptocurrencies. Before I depart, I wanted to talk about one of my sponsors, Moomoo. They were kind enough to reach out to me and begin to sponsor my channel, and I appreciate that very much. They have a new offer where they'll pay you 8.1% on cash for the first 3 months if you become a new account holder. And after that, it's 5.1. They'll also, if you deposit $1,000, they'll give you 15 free stocks. And that's pretty exciting. I'm waiting for my 15 stocks to be issued, and I'm curious to see what I'm going to get. They also allow you to buy Bitcoin, Ethereum on their platform, which is really exciting. So consider it if it's the right thing for you. I'd appreciate it if you use the link that I'm providing to get signed up. Thanks again for watching.